What is going on, traders? Welcome back to the Traveling Trader. Happy Friday to you. Let us take a look at Bitcoin and go over what is Bitcoin doing exactly right now and whether buying Bitcoin here is an optimal option, right? Whether that, or an optimal decision, I guess, whether that is something that you can do fairly low risk, or whether we should wait for the market to shake out. So let me give my analysis on Bitcoin, and then I'll go over what's going on in the stock market. Obviously, a little bit of a down day today, or a significant down day, with the fears of the coronavirus spreading, and not only the coronavirus itself, but the effects that it's having on the Chinese market, which then reverberates globally as well as throughout the US, since a lot of American companies have factories and production units and whatnot in China. Gold right now is absolutely killing it as the fears in the stock market mount. Our position in GLD is up 12%. This isn't a new position. This is something that I've bought towards the end of last year as we fell just beneath the major moving averages here. So we're up 12% on GLD. This is actually one of the indicators that analysts use as a sign of a potential impending market crash or market correction. I don't want to spread fear, but market correction is that as interest in gold continues to increase, then it decreases the interest in securities, fueling more and more sell-offs that has been triggered for whatever reason. In this case, the coronavirus and the effects that's having on the economy. So we see gold rising because of those fears. However, there is definitely bearish divergence here on gold between the price and the RSI. Either way, I will definitely be setting a trailing stop here as we are up 12% on gold. Tesla, our position is up 170%. Amazon retraced a bit today. We're still up 13%. If you want access to the trade alerts where I send out all of these trades, link is in the description. It'll cost you less than a cup of coffee a week, and in my view, well worth it. You also get to join the group voice chats that we have where we talk about coins, stocks, options, trades, technical analysis, portfolio management, stock picks, etc. So sign up, link is in the description. All right, let's go over Bitcoin. So Bitcoin, we've actually been swing trading Bitcoin using leverage based on the little range that it's in currently. It's finding support just below the 21 EMA. And I was saying on our Discord group that just because it fell below the 21 EMA, that's not really a bad thing. And if you look at, what happened on the previous rally leading up to June, we saw Bitcoin spend over a week below the 21 EMA here before a rally to 14K. And then, right after that, as soon as we dipped, we also spent some time below the 21 EMA before then recovering to about 12,500. So, being below the 21 EMA technically is not necessarily a bad thing. The 21 EMA is a very good marker of Bitcoin's current movement and current trend. Now, if we fall significantly below it and we start to break some of these other moving averages, and then the pattern takes shape and forms a bearish pattern that signifies a potential reversal, then we'll shift our sentiment. For now, in my view, Bitcoin is still positive. We broke above this long descending channel, right? And we retested it or close to it again back at the end of January. We're following this uptrend on the 21 EMA, right, that you see here. And we are now, every time we retrace to the 21 EMA, it's just an opportunity for Bitcoin to cool off and bounce. And it's not just Bitcoin. The 21 EMA is very useful on the daily chart for a number of assets. You just have to pull it up and see, whether you can generate some solid analysis based off looking at the 21 EMA or the other moving averages or whatever. But anyway, you see this golden cross between the 50 and the 200 here. This is very bullish. And the VFI, which is the volume flow indicator, is still over zero, which is something you want to see. So in my view, as long as we're hovering around the 21 EMA, as long as the VFI is still over zero, we still have this golden cross. And then, ultimately, as long as we're over the 200-day moving average, I think Bitcoin is fine. Obviously, the halving is coming up. And whether this right here is the pre-halving drop or whether we will have a drop right before the halving, we've seen both scenarios in the last two halvings. I've gone over it in my last video, so go and watch that if you want to know how I addressed both of the previous halvings and what's the possibility for the next upcoming halving. But, in my view, Bitcoin is just cooling off here in a continuation pattern. There isn't really anything to signify something, a doom and gloom scenario, or even a major rally, right? It's just in a continuation pattern that will likely continue as time moves along. Like I said, we could spend a week or even more here just below or at the 21 EMA. But with that said, I have been leverage trading Bitcoin, buying at around, you can essentially buy it at around 95 or 9,600, right? With leverage. In my case, I use 10x leverage and intend to sell it close to 9,800. This morning, we made 14%. Here it is on BitMEX using 10x leverage, right? Buying it at between 95 and 9,600 and selling it at almost it didn't hit 9,800, but it went to the high 9,700s. Certainly, if your risk profile doesn't allow it, you don't have to leverage trade. You could just buy Bitcoin on the dips and hold it. So is there a buying opportunity here? In my view, yes. This is very low risk, actually. So if you're not in a position or you're looking to add to your position, this right here is very low risk because it is right at support, in this case, the 21 EMA, right? So you can essentially buy here with a very tight stop limit and potentially write it up for when the rally, when the rally occurs. But if Bitcoin goes against you, you're actually in a very low risk spot because your stop limit can be very close to where you entered. So, yes, you're going to obviously lose a little bit, but you escape with minimal harm, and the risk to reward ratio is a lot greater for a potential upside break. Another one I'm eyeing really quick is ICX. It's in this bull flag here on the 1 day. So I'm looking at ICX to see how it behaves. If it breaks out of this bull flag, currently it's finding a lot of resistance there. But yeah, just monitoring this for now. I'm not in ICX. I'm in a few other coins. Again, if you want access to the trade alerts, link is in the description. And you also get access to my entire portfolio where you'll know exactly what I'm in and what percentage of my portfolio it constitutes. Just taking a look at the markets real quick. Dow's down about a percent, S&P about 1.15%, and NASDAQ down a whole 2% here. Again, I've said it before, but because the market is overextended, you're going to continue to see this back and forth movement with the markets, right? Because we are so overextended, anything, any negative news, any inkling of negative news can actually move the markets because they're looking for, investors and traders and analysts are looking for any excuse for the overextended market to fail. You start looking for, factors that might affect the market, and everyone is basically on eggshells. Now, I'm not saying the market is going to tank. I mean, we've seen this. Just look at the S&P, going all the way back to last year. Every time we hit a high, it looks like we're going to face a correction, then it hits another high, then it looks like we're going to face a correction, then it hits another high, etc. So obviously there will be a time when this bull market is over, and I'm not saying that this is the time, but it does feel like all these other times when we hit highs where the market is basically being dictated to by any negative news cycle. However, the S&P is in a clear trend here, continuing to make higher highs while finding retracements. Again, the moving average is showing up here as support. You see the 21 EMA and the white line. The 50 MA is the orange line, and then the green is the 200 MA, right? So these are very reliable when we're talking about retracements, especially in an uptrend. And currently the S&P is sitting at the 21 EMA. In my view, as long as there isn't any breakthrough, any breaking news on the coronavirus, where it's just a lot worse than the world has thought, we're going to continue with this back and forth, up days, down days. I also think the Fed is going to cut rates one more time, which should also give the stock market another surge forward. And if Trump wins the election in November, again, politics aside, I'm just speaking as a matter of fact, then I think that the bull market has a chance to continue. One thing though, looking at the S&P that is worrying me just a little bit is this bearish divergence. We haven't seen this in a while. I actually don't remember the last time we saw regular bearish divergence on the S&P, but if you look at it here, there's major bearish divergence between the price and the RSI and even the MACD here, right? So you know, this is something that we haven't seen in a while. So in my view, I would not be surprised if the downside action continues for the near future, maybe retesting close to the 50 MA. Anyway, that is it for this video. Go ahead and sign up if you want access to the trade alerts, crypto, stocks, options, etc. Like I said, you also you get access to the group voice chats that we do. Subscribe to the channel, hit that notification bell. If you got anything out of this video, leave a thumbs up. If you have a question, comment, agreement, disagreement, whatever, leave it in the comments section below. Stay safe out there, traders. Peace.